Wake up. Good morning, everybody. Happy Wednesday. It is CPI day. Today is the day we're going to get what I am judging to be the most important economic data point right now, more important than the jobs number, more important maybe even than like Fed speak, right? Because it's inflation. It's the number that is looming over all of our lives right now. So that'll be at 8:30. We are going to be watching for that, reacting to that today. But we have other things to discuss. We got to talk about Biogen. Biggest news after hours yesterday was out of Biogen. We'll talk about that. We'll talk about China this morning. Have you guys seen China this morning? Alibaba, JD, Baidu, they had some inflation that wasn't as high as the expectations. So China going up this morning, and we'll find out if the U.S. gets to copy that in around a half hour or so. Sean Emory is our guest today from Avory and Company. Excited to have him on. He has some growth stocks. Yes, I said growth stocks that he is ready to pitch our way. So let's get to it. Hit that like button and tell your friends.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
All right, it is the three best friends anyone can have. Spencer, Joel, Dennis. What's up, guys? How are we doing?
Good morning. Good morning. We're in the green here, 5 1/4 handles, 47.10 1/4. Stuck through Thursday's high. Pre-market, that was 15.75. We'll keep an eye on that. Pre-market low, not much there, 46.95. Crude continuing to rip higher, up 33 cents, 81.55. Gold getting back over 1,800, up 50 cents at 18.19. Silver just up a couple pennies, 22.83. Bitcoin finding support at 40K, up 545 at 43,350. Ethereum futures going the same way, up $77.50 at 33,1950. CPI day, as Spencer mentioned. We got a lot of green on the screen, just like yesterday. Triple D, little bounce back, right?
Yeah.
This market can't keep it down.
It's still chopped, though. I mean, even yesterday we were up 30 handles when we started very early in the AM. By the time the show had come around, we'd given a lot of that back. And then we ended up going down 30 handles, which is just an incredible turn when you think about it. And obviously, we came around and they liked what Powell was saying, and they bought. So, I mean, I guess you're buying dips, selling rips, shorting rips, buying dips, doing however you want, but I'm just not buying the rips. I know people are getting the FOMO. They're starting to chase. It's what the market wants you to do. It wants you to get scared. It wants you to come in and be like, oh, I've missed it. I got to pay up here now, or I'm going to miss it out on all the money that all my friends are going to make. I mean, that's what the market tries to get you thinking. So, again, I don't, try not to fall for the FOMO. I believe you're going to get more chances. There is some stocks. You may have some Johnny come lately stocks that haven't participated yet. Those, might participate. You do get a chance in something, like even a PayPal here today. We have an analyst helping you out because that stock had a nice candle yesterday. And now you get the downgrade at the worst possible time for that analyst, but the best possible time for you as a trader. So, you look at an opportunity like that. Maybe you want to nibble into some of that, buying a dip on something, because an analyst has an opinion differing from, what maybe the market's opinion is on that stock right now.
Wait,
lots of tangents.
I need to interrupt for a second. I am aware that the topics on the screen are from yesterday.
Oh, no.
We're working to fix that.
Well, Enver has COVID, so we'll forgive him.
Yeah, Enver and Mitch both have COVID.
This is the people working in the background all have COVID.
Yeah, so
we're using that as an excuse today.
We'll give them the excuse. But
the dreaded green screen.
Oh, no, a green screen.
The green screen of death.
Uh-oh, this show has gone off the rails today.
Can they hear it even through the green screen?
Okay, topics are good now. Topics are good.
The green
there we
screen
go.
of death.
Topics have been fixed. Okay, now we're running through them all.
There we go. Overnight. Okay, and I didn't know where to go, so I just started talking about everything because I didn't have the topic list to follow.
Oh, boy. Oh, no.
Where's Bert when you need him?
Bert is sleeping, Joel.
Bert's sleeping. Wake Bert up. All right. So the overnight action, that's where we're going to. Joel I guess he kind of did talk a little bit about it. Do you want to talk a little more about the overnight action?
We've taken back half of that move, right? And we're back up near what was Wednesday's close? I just wanted to see what that was. That's Monday, Tuesday, 46.92.50. So we're above when we got piled, back above
I like the
4,700.
verbs you have lately.
Yeah, I mean we're holding steady. I mean that's it. There's not much resistance up here. If they like this number and they get it to 1875, there's air. There's really air up to some closes at 47.70. You just got to. Are people going to be booking profits from that? From that really nice 2-day run. Yesterday, you had to pull back when Powell was speaking, and you were hoping, for stuff to get back down to the lows from yesterday, and it really didn't get anywhere near those lows. So I don't know. I don't have much in here. I don't have much as resistance. So let's see if it comes in like a soft number. That they could really rally this thing. There's really nothing up here until
There's nothing
40.
up there, and there's
Yeah,
nothing
there's
down there.
No, you're right.
You know what
You're
that
right.
equation equals?
Chop.
Chop. You got it, Joel. The trading word of 2022, chop. And how do you play chop? You fade everything. So, I mean, sometimes these moves are sustained. You're not fading, 1% little moves, but you're fading. Overall, you're fading this, you're fading that, you're getting that whipsaw action, the headline number goes down. Even yesterday, if you're day trading, Joel, something important is calling you. But even yesterday, we drop in the first hour and a half, and then they turn around, they start buying them again, and then they seem to buy them all afternoon. We had 2 days that were virtually identical, really. We got hammered on the 10th, way down around 11 o'clock. They started their buying shoes on. They kept buying them all day. Yesterday was the same thing, just not as extreme, where we were down near the lows around 11, and they started buying them. They couldn't stop buying them all day.
Yeah.
So again, I guess just fading is the way you got to be trading. I love this market.
You really got into my head. Sometimes I feel like Dennis is like a parent, and he like has to repeat the same.
I try to. That's all I do is repeat myself.
You're right. I know, and you have been, to your credit, you've been repeating yourself ad nauseum for several months now. And yesterday, for whatever reason, it like finally sunk into my brain, and I just like everywhere I went, every chart I looked at, I was seeing yo-yos, I was seeing pogo sticks, right, up down, and I couldn't get out of my head. So I half seriously said I should just sell everything today and buy it back in 2 days after we sell off a little bit.
It'd probably work,
but it probably wouldn't work, honestly.
So here, and we might as well, we're gonna go out of order here for a second. We go to China, and then
we'll
go back to Biogen. But I want to go to the China stocks because it applies here. What are you saying, Joel? What's up?
Oh, okay. Because I'm looking at the yard stream. I see what you're looking at here.
Yeah. So I'm looking at the schedule on the
so
right.
We're going out of
supposed to go to Biogen next, and we get in trouble. They dock our pay when we go over there. But anyways, China. Just kidding. China. Okay. So obviously, I bought those couple of stocks. Yeah, I bought those couple stocks yesterday, or 4 days ago. I bought JD. I said it on the show. I bought JD for the long-term account, and I bought Baidu for the long-term account. I bought JD, I believe, around $65. It's $78 4 days later. I put this in the long-term account because I kind of was liking the fundamentals, but I'm looking at this, and what's 13 points on 65? What's that quick? Joel, give me that math. It sounds to me like it's close to 20%.
Yeah.
13 divided by 65 is 20% right on the button. Nice. I'm up 20% on that purchase in 4 days. I mean, I almost have to sell it. I mean, you just made 20%. You just got half the move back in 4 days.
That's it. Yep.
It got over half the move back. I mean, what the gift horse in the mouth thing that you always say. But I look at Baidu. I'm not up quite as much in Baidu. I believe I bought the Baidu at 143. I think 144. I can't remember. Right in there. 145 maybe even. But 160, so, roughly 10, 12% on that one too. I mean, this is what you got to do. If those are on for trades, they'd be long gone. I stuck them in the long-term account, so I kind of, was supposed to hold them long-term. But when you make 20% in 4 days, it's like you're saying, Spencer, why don't I sell it? Because I'll probably be able to rebuy it at 70 in a week.
Yeah. So anyway, if you don't know why China's up this morning, they had their own CPI out overnight, and CPI in China for December was only up again, this is what the numbers say. If you want to go into the whole thing, if you want, but the numbers say 1.5% is what inflation was in December compared to a year ago, which was lower than the consensus 1.8% estimate. So inflation in China, not as bad as the estimates were according to the government. And that is why all Chinese stocks are rallying this morning. So Dennis, great job here.
Great entry. I haven't done the exit yet, though. So do you sell it, Joel? Like when you stick it in the long-term account, you're not supposed to be selling and trading your long-term account. But when your long-term account on a stock like JD, we're not in some flying biotech here. On a stock like JD, gets back half the move, is in the doghouse, gets back half the move in 4 days. Don't you ring the register? I'm asking. I have a small position. They're both small positions, but I don't know.
Well,
tell me what to do, chat. Do you ring the register or not?
It's bid here. I mean, can you hold out for 80? You got a daily high at 80. You got a daily high.
I know you want to stick around for the last buck or not when you just made 14 overnight. I think the bigger question is, I'm not supposed to be I don't like trading my long-term account. I stick something in the long-term account. It's supposed to be in there not for 4 days.
So stick to your rules.
And the rules cost me money a lot of times because my trading instincts are usually right. So I know, like, I've had some instances where, I put that in the long-term account. And then I watched all the profits fade away into oblivion and saying, why did I not sell some of that and then rebuy it right now? Again, not trying to trade your long-term account. That's why it's supposed to be long-term investing and short-term trading.
82.40. All right. I'm just going to give you some potential resistance levels if you can, just hold on to your hat first. I mean, it's already traded, right? So a lot of the price is factored in, but it's holding. I mean, it's just holding here. I mean, could you put a stop in at like 77 and forget about it and see what happens today?
I think you get stopped out on everything.
Okay.
I think it's just the way this market works. It'll like tank down to 76.95, stop you out, and then rip to 80. It's the way this is the worst market.
I like 81.
Here's a nice educational 3 minutes of education. When you are in chop markets, if you're using the stops, you get stopped out on everything. That's the problem with, it's like the risk management's really hard in a choppy market. And that's why a lot of very good traders really struggle in this environment because it is just, chopping. So it's hitting all the stops. And, there's not as little, maybe for whatever reason, we're trying to figure out where we want to go. But when you're going like this, stopped out on both sides all the time. The stop is actually, in essence, selling the dip and buying the rip. It's really what it's doing. So it's doing the opposite. So it's tough to use stops when you have this much chop. And I'm not saying just throw risk management out the window, but you got to go wider. You got to give yourself more, because if you're giving yourself like a 1-point stop on JD, you're probably getting stopped out 90% of the time because it's going to chop you up. So it's tricky. I mean, I've always had some trouble separating the long-term investing from the trading, and the trading creeps into my long-term investment portfolio. I have some I've had MasterCard in there for like a decade. I've had AbbVie in there since birth. I've had Apple in there forever. I've had Google in there for like 8 years. Those have been great. And my best long-term holdings are the ones I never touched, the ones I never traded.
You know what I think it is with you, Dennis, is, and this is obvious, but it's like a momentum thing. The longer you've held something, the harder it is for you to sell it, I think, right?
And, well, you can get over that hump. It's right. Like when I'm first putting it in, it's like,
I'm not sure what that threshold is. When maybe it's a year, maybe it's a year for you, where like, well, if you've held something for more than a year, you're significantly less likely to sell it. But you have a very hard time. You have a very hard time holding things that you've just bought, even if you intended to hold them long term.
When you get out 20% in 4 days, it's like the trader in me says, give your head a shake. You take the money and run. But trading gods give you a gift like that. You take the money and run. But I don't know. And then Baidu is the same story. So those are the only 2 stocks. I think I bought something else the other day. I can't remember. But, my main 2 stocks that I bought are JD and Baidu. And I said I put those in the long-term portfolio.
I don't know what you do here, because I also told Joel, when it was just him and I this morning, I was like, well, now if you're buying Alibaba or Baidu or JD now, at least now you're not catching a falling knife. And yes, I know they've already come up a long way. I know I'm doing it backwards, right? But I would feel a little bit more comfortable, like, taking a longer term position now I don't know, but do I? I don't even know what I feel. I don't know what I feel. I don't know.
160 fills the gap, but I mean that
This is
was
hard.
that's on the Chinese. Dennis, I know how you can really get them to go down. Sell half.
Oh yeah, I'm
Yeah,
always wrong when I sell half.
sell half.
Because I'm like a glass half empty type of guy, so that's a lose lose. That's a guaranteed 100% piss me off trade. Because if I sell half and it goes up, I'll be like, why in the hell did I sell
I
half?
said,
And if it goes back down, I'll be like, why the hell didn't I sell at all? So when you sell half, you're guaranteed mad at least. But if you're glass half full type of guy like Jeremy Newsom, then you'd be like, oh, this is great. I still got a piece of the action when it's going up and it sells off. So, at least I sold half.
this kind of feels like your trades for the turn of the year. Where you were like,
Those are all wrong.
I know, but I kind of feel like you're right. Like you.
Well, I was right on. There's no doubt I was right. I bought $65.78. It's like, can I make the right trade go wrong by holding on too long? Though?
Look at the monthlies, though, Dennis. Just zoom out. I think. Look at the monthlies on this Baidu baby. Look at this. I mean, this thing could just be getting going.
Oh,
Look at
okay.
that.
So
Oh,
let's
I see. I thought you were going to make the opposite conclusion. I was going to say sell.
Sell, Mortimer. Get in there. Sell, Mortimer.
This is hard. I don't know. And then Dennis's point about the stops only applies for physical stops. Obviously, a mental stop is completely
The
different.
same thing. I mean,
No, it's not. A mental stop can be massaged. Can be.
That's not supposed to happen, though. So I say stops. If you put up a stop, I rarely put the stop in there. I'm close enough to the market where if it gets to the price, then I would just sell, or you can set an alert.
Yeah.
So you don't have the physical stop on the book, so you don't have stop hunters actually running you. Which I don't know in this environment how much stop hunting is going on. It's so much chop and stuff. Maybe there is, but maybe that's always existed. But I always think it's better, that somebody doesn't actually see your stop. So I don't like sending the stop to the exchange. I mean, some of the brokers keep it in the internal system too. I believe IB.
Yeah.
I'm not 100% on that, but I believe it's kept on the platform. So it's not like sent to the exchange where the exchange can do and maybe sell that order. We don't know what happens. They're supposed to keep it anonymous, but we know sometimes there may be some not as anonymous as you'd like it to be. But you'd hope that when your broker's holding it, your order, it depends on your broker, obviously, that maybe they don't know about that stop. I think if you're at like a Robinhood, and I don't trade on Robinhood, that's probably not being held on the platform. But I don't know. Some brokerages do hold them on the platform. But regardless, I mean, if it hits your price, it hits your price, and then you're getting out. It's just the type of environment where stops are troublesome. And and I like stops, but when you're in like really choppy markets, you get stopped.
They get you.
They get you.
Yeah, well, the best way to keep your stops secret is to keep them locked up in here, and then no one knows. Anyway, let's go back to Biogen here. We Biogen. Let's go back to Biogen. This was the big news of the after hours session. And apologies from us to you because both Joel and I had mentioned this and forgotten to bring it up yesterday or the day before. So because I didn't know that there's a hearing today. But the decision came out yesterday after the close, and the decision came from. Let me make sure I get the organization right. The CMS, right? The Centers for Medicare and Medicaid Services, and they were basically offering up their opinion on whether to offer Aduhelm, right? Biogen's Alzheimer's drug, whether to offer that on Medicare and Medicaid. And the initial conclusion seems to be yes, they're going to offer it, with a big caveat, and that caveat is it's only going to be available to patients who are enrolled in the clinical trials, and who are showing symptoms. Right, that's basically it, which severely limits the population of people who have access to this drug. So that's the first thing. The second thing is this is not a final decision. This is
it's never a final decision. Nothing's ever a final decision.
That's also a good point. This is the start of a 30-day window now where they're going to take public comments and then maybe reassess it 30 days. But this was the initial decision out last night. So it would limit access to Biogen's drug. I should note that this drug seems like it's been doomed from the beginning, and I only say that because the price was like $56,000 and they cut it in half, so it's like $28,000 a year. Several major hospital systems have said that they're not going to prescribe it. Like I think the Mayo Clinic, the Cleveland Clinic are just not prescribing it. So sales have been minuscule according to Stat News. So, or I said negligible was the term that they used. So this drug, it just seems like it's been doomed from the beginning. But there's your Biogen news, and that is why the stock is doing what it's doing.
And just incredible movement on the headline. So let's talk about how headlines are written, and how news algos don't dig into the details very well. I mean, the original, first line. Read us the first line again, Spencer, if you can, just from the release, because if you're a news algo and you read that first line, you're like, this is bullish.
Yeah, so the very beginning, the very first sentence in the decision summary, this is on the website. This is on the Medicare, on the CMS website, the Centers for Medicare and Medicaid Services. It says the Centers for Medicare and Medicaid Services proposes to cover FDA-approved monoclonal antibodies directed against amyloid for the treatment of Alzheimer's under coverage with evidence development. So basically, like the first sentence says, yes, we propose to cover this drug. But you had to keep reading to get to the part about only patients in clinical trials, and you have to show symptoms. So
what happened was, you can see this initial spike, and it is a violent spike. So this stock went and closed Biogen, and I was watching this. It was lighting up my up filter. Closed at 241. It ticked up to 259 in the first few seconds before you could even see the release, because everybody's faster. The HFT algos are all over it, the news algos. So I'm like, okay, well, there's obviously Alzheimer's news. Biogen just ripped up. I even tweeted out, just ripped up 19 points. And then not even 30 seconds later, they must have read the second sentence. And then they're like, oh my gosh, it's bearish. Pull the bids, shut the news algo off. We're getting killed here.
Dennis, man, you are feeling good, buddy. Don't tell me you're sick or nothing like that. You are like, I love that again. The news algo, we're losing money.
Billy, get to the chopper. We're in trouble here.
That's Arnold. That's Arnold, right? Schwarzenegger.
Arnold.
Yeah, Predator. Billy, get to the chopper.
That's Arnold Schwarzenegger.
Right.
Schwarzenegger.
Right.
Yeah,
right. Okay.
Yep. His kid went to Michigan, I think. Him and Maria's kid. What do you do here, Dennis?
But anyways, they pulled the rug out from under it, and then it fell 40 straight bucks in the next 10 seconds. So news algo assassinated on it.
Yeah.
I don't know. I'm long Biogen for, this is one of the first stocks I've ever bought. I think I've honestly owned this for 17 years. I'm not joking. I might have even owned this for 20 years. I'm in from $35 or $40. I mean, I'm up 1,000% or whatever it is. I guess it's not anymore because the stock's come down so far. I probably should have sold at 450 and rebought it all here, but I'm holding. I'm in it forever. So the stock's actually cheap. I mean, we all know this drug is a lottery ticket. It's not the be all end all. The company, is maybe out of favor, but you got great support down here at 215.
Yeah,
if I didn't own any, I'd probably buy the dip, to be honest, because I don't think they're going to hammer this 40, $50, because you know what? They make so much other money from other stuff, and this company is huge. I mean, and Lilly's getting hit on this too. It's not the death of the drug. It's not the end of the drug. And obviously, when everybody's buying it up at 450, that was capitulation of the upside.
Crazy.
Yeah, down $22 because Medicare is not going to cover it, and obviously it's not great news. But at the same time, this drug is not all. This was a lottery ticket for Biogen. We never thought this drug would get approved anyways.
Yeah. What if the people in the trial, that use it and get positive results? I don't know how long you're going to have to wait for that, but
but again, it's such a small number of people, though. You know what I mean? Is like that's So Joel's right, but that would take a while to play out.
It's very expensive. There's a lot of side effects. It's tough to manage.
I think if you're dumping it now, though, I don't know. Maybe it's an ugly. Stock's been a downtrend for ever since the 450 that day. So but it's pulled up. What's a P on this thing? 7? Seriously, we're in a value-oriented market. What is the P on Biogen?
No,
it's under 10.
It's not that low. No, it's not. It's
where is it?
It's in the 30s. Oh, I'm not
No,
aware. Wait. I'm on
that's
the wrong.
not
Wait.
right.
I'm on the wrong number.
There's no way.
I,
I wouldn't own it if it's in the 30s.
I'm not. I was looking at market cap. The forward PE is 12. Okay, so
12.
you win this round.
Yeah, 12. I mean, that's par for the course for all these pharmaceutical companies. So I don't know. You're dumping it here because that's not covering. I'm not saying it's going to bounce back, but I don't think it's going down $50 today. So
Folks are getting bullish here ahead of the report. Here, we're just inching up
cover those
towards
shorts. What if it's
we got
good?
into CPI.
I just want to thank everyone in the chat for acknowledging my amazing joke that these guys did not even get before, but that's
I
okay.
missed it altogether.
What
I
was
know.
it, Spencer?
I stopped to emphasize it, and you still missed it.
We didn't know.
I said Arnold Schwarzenegger.
Were you making fun of me the way I said it?
Schwarzenegger. Oh my gosh. Okay, we're moving
Who's
on.
Shorts. Okay.
Shorts.
Yeah.
Oh, I didn't
boy.
catch shorts.
Man,
Schwartz,
chat.
shorts.
The
Oh.
chat
Use
must
Schwartz.
be channeling Spencer. I don't know on that one. I
I
know you
missed that
said it.
one
I
altogether.
know I kind of stuttered when I
This
said
is
it. So I didn't
brutal.
know.
This is brutal. All right, let's move
This
away.
is
Schwarzenegger. I
let's
get
talk
it. The
about
shorts are
something
taking
else,
over.
man. Let's talk
Alright.
about.
I got
okay.
it.
Skip on over down to CPI because that's what we have here coming up in
4
4
minutes. I gotta go wide here. I talked to you for one more minute, but then I gotta go wide.
4 minutes. Okay, here are the expectations. Again, you can argue whether these are even useful, but we have to measure against something, right? So there's two things we can measure against. We can measure against the estimates, and we can measure against last month's figure, which is what we're going to do here today. So the estimate for today is for CPI to in December to have gone up 0.4% month over month, and then that would be a 7% year over year increase. Those are the estimates. 0.4% month over month, 7% year over year. Core CPI, which excludes food and energy, would come in at 0.5% month over month and 5.5% year over year. So those are our numbers. Key numbers here: 0.4 and 7. 0.4 and 7 are your regular old CPI numbers, and we're gonna watch and see what comes in. And this will inform the conversation for the day, basically, because this is it. This is inflation. This is what.
How you feeling, Joel?
I mean, there's no reason. I mean, if you're shorted into this thing, there's not much there. So if it takes out the pre-market high, you got to go. Now, if it's a super hot number and we start to come down,
So hot.
yeah, the close. Keep an eye on the close at 05. So that's it. I mean, when I tell you I can't find resistance, folks, I'm not joking. That doesn't mean there isn't any out
There
there.
ain't a lot of support either is a problem.
Yeah.
Yeah.
Chop is going to be the word. I'm going to say it again. We're going to see a fake out one way. We're going to say a fake out the other way. We're going to see 5 fake outs before we get a trend. I'm going to call that.
Yes.
Well, what about like the way the off the what was the last number that we had, the unemployment number, the futures moved and the stocks didn't. Remember that? That was so strange.
Oh, it could happen again.
Yeah.
Because if you see there's so much chop, it's like, okay, well, I'm going to go hit the bid. Oh, wait, the futures are bouncing back. I'm going to go take lift that offer. Oh, wait, they're selling off again. It's kind of how it goes. I mean, the algos are on it, but they're not on it at the same time. You know, you go
This
during
is
the day,
tougher.
9:30, they're all online. 8:30, they're like, oh, we don't know the exact value, so we just won't trade.
Yeah, exactly.
All right, I'm going wide.
Reference,
You guys have 2 minutes to discuss things amongst yourselves.
So for reference, if the estimates are correct here, it would be the 8th month in a row of inflation above 5%. And you know, it's funny because for how many years the Fed said, yeah, we're comfortable with like 2%, 3%, but we don't really want inflation going above that. And then they say, yeah, we're actually, never mind. We're going to let inflation go. And go it has. It has been going. So again, 7% year over year would be your headline estimate for the day. That's let's see how the number compares to that. We're going to be watching, obviously, autos, right, is a big one, right? Durable goods is a big one, right? Food, gas, these are all the things that people experience every day. So going to be watching all that. We have under a minute now. Joel, if you can pull up the S&P futures.
I do. I got the minute chart here. leading bullish into the report. I'm just that little pop, so that makes me bearish. But
Yep.
let's just see what happens. The pre-market, or yeah, that pre-market high is 1817 or 1875, and Thursday's high was right in that area. So 3 points. You can't say it really went through it. Coming back on the downside, the only thing I can give you is that close at 47.05. Whoop, they just whooshed her down and back up.
Yeah, but
Wow.
the number's not even out yet.
And the order's not even out. Look at that. Holy mackerel. You talk about stop hunting right there. Holy mackerel. What a move. And the number's still not out. Someone got the number. I'm telling you. And it's good. Right? We had to quit. We printed like
There we go. There we go.
Yeah.
It was right in line. It was right in line. Sorry, I was refreshing the page and it didn't refresh until it didn't update until my third refresh. But it wasn't in line, right? CPI 7% in December, which is right where estimates were, right? And it's a smidgen above the November's reading. November was 6.8%. So 7% year over year. Estimates were right in line there. Month over month, 0.5%. Estimates were pretty much in line there. I'm not going to split hairs between 0.5 and 0.4%. So the estimates were pretty much on the ball here. Okay. So there we go.
I'm gonna do a reset here. I mean that '07 print, I'm gonna throw that out, and I'm gonna throw out the 2575 print, and I'm just gonna stick with the real, that 1875. We're starting to tail off a little bit, but boy, someone jumped the gun here. Holding steady. We were right at this area before the number. Nothing definitive here. Just went wide and just got a lot of people. Now it seems like firming up, catching a bid. Told you there wasn't much up here as far as resistance. I can't see now. Once again, the stocks they're not ticking. Like I'm looking at JP Morgan, it's up 49 cents at 67.98. They're waiting. I thought Apple's moving within a 10-15 cent range. But I think they
Yeah.
like it. I think they like what how Mr. Powell's engineering this.
Yeah, I mean,
Right?
if you want to, if you have a bone to pick, you could say, well, core CPI came in a little bit higher than expected. Core CPI came in at 0.6% versus the 0.5% month over month estimate there. So food and energy, take that out of the equation, and core CPI came in a little higher. But yeah, I mean, all things considered, this is actually a pretty.
It's a pretty good number.
Yeah, I mean, it's not crazy one way or the other, right? And I think that's what the market wants to see, and that's also probably what they're extrapolating Jerome Powell wants to see, right? And the Fed wants to see. So, yeah, all in all, I'm looking at around just as you are, Joel. I'm looking for movers here. The TLT did move off that a little
Yeah,
bit.
what's a TLT do? I'm still looking. I mean, is this stuck in my quotes? I mean, JP Morgan 68.13 up 64 cents. I'm looking at the top components and they're hardly ticking here.
Yeah.
Tesla's moving a little bit. We're ripping higher.
This is always, though. This is when you have chop like this and you don't have directional, they won't move. They're trying to figure it out. Because how do you do it? You got to think the logic behind it, what's happening. Because it's not HFT algorithms running the pre-market. They run it a little bit. They'll run it on S&Ps against the futures. But it's hard to do the stocks because half of the S&P isn't even got a decent market. So it's hard to run it. So you have humans. So the humans sitting there like me and saying, well, do I buy or do I sell? Do I buy or do I sell? You're still chopping around. So I'm like, if the futures rip up 25 handles, we're ripping stocks. But when they rip up 5 and then they sell off 5 and then they rally 5 and they sell off 3 and then they rally 6, there's no, it's hard to really get the feel So obviously during the day, it's different because all the components are open. They can sell them all. They can buy them all. They can do the
arbitrage more efficiently.
Yeah, when you got S&P 500, you have 400 of the components that are sitting, a 1% market, literally 1% wide or wider. You can't just jump in and boom and go all in like that. So that's the difference. So if you see a directional bet where it's okay, this is obviously bad news, then and the market's tanking off it, they're going to start hitting the stocks. In the opposite, this is obviously good news. Market starts ripping, they're going to buy the stocks. When you see the stocks aren't going to move much because they're trying to still figure out where we're going. Because you turn around and lift, an offer up on a stock 0.5%. Now the futures all of a sudden just pull the rug off under. It's like, okay, well, I have no bids to hit. So it's, even, you can bring up a stock even like Microsoft. It's sitting 30, 40 cents wide right now. Wow, that's not a lot, but it's enough. So
You don't want to
anyways,
give up the edge on something like that.
yeah. Let's go get
let's-
Emory.
Yeah, Sean Emery is lurking here in the background. I would like his thoughts, initial thoughts on this. So Sean Emery is the founder and the CIO of Avory and Company. We always love having Sean on the show. Let's bring him on right now. Mr. Emery, how we doing?
What's going on? Happy Wednesday. You brought me on a good day.
Yes, we picked a great day to have you on. You've had a whole 4.5 minutes, Sean. Give us your super thought out take on that CPI number. Go.
Well, first off, it's not as influential to us.
Okay.
Yeah, in terms of how we think about the companies, right? So big picture that narrowing in on the report itself. Obviously, when you come in kind of bang in line with what expectations are, I think everyone can take a deep breath and kind of again, you're looking for deceleration or acceleration. I think that's what most investors are looking for, whether this thing is accelerating out of control as opposed to some sort of decel. So any sort of plateau topping is something that we're all kind of taking, again, a sigh of relief, deep breath for.
Yeah, and that's what the number would seem to indicate for now. Much of the same. I'm just looking at the individual, looking at the table here on the site. Much of the same, right? Obviously, energy leading the way in terms of year-over-year inflation and utility services and new vehicles, used vehicles, obviously. So more of the same, but overall, yeah. I take your point, and I am inclined to agree with it. Sean, you have a couple of growth stocks that are on your mind. You said you have growth stocks that you've been nibbling in. I think is that right?
Yeah, nibbling and then clawing at here.
Clawing at. Okay. Do you
yeah.
want to? Yeah, you want to share those with us and tell us why?
Yeah, I think the three to share are really two Z's and another, right? It's Zillow, it's Fiverr, and it's Zoom. I think three of the three amigos for us, and essentially, again, these were COVID beneficiaries facing tough comps. A lot of what they have done has been fairly sustainable. I think you take Fiverr, for example. 2020 was a big year for them. 30 million downloads in terms of the App Store downloads going back since inception of the company. And last year they saw nearly 10 million downloads. So a third of their downloads came in 2021. So again, post 2020. So we saw a kind of an average download volume last year that was higher than essentially any month in 2020. And I think that eludes kind of that sustainability there. In addition, look, that chart got absolutely decimated. And decimated means obviously the valuation's coming down. And we were nibbling and continuing to grow that as, again, we believe in the management team. We think they do have this durable marketplace that they've built. We do think 4% of freelancers are online, and everyone else is kind of word of mouth in terms of how you engage with them. And just like any other kind of commerce related industry, it's going to go online. And the one that has kind of these network effects on a marketplace, I think will win. Yeah.
Yeah. So okay. So the three stocks you named, right? Zoom, Zillow, Fiverr. The charts all look the same. So like, how do you approach this? Because I know you're a fundamentals guy, and you're also not like a super short term trader. So you're looking at this from a little bit of a longer perspective, and you're relying on the fundamentals. How do you go about getting into the stocks like these when the charts look the way they do?
Yeah, and that's the thing is, right? I think you nailed it. They all look the same, and they're all trading together. They all kind of have this factor. You were talking about computers earlier, and obviously computers, generally speaking, in the short term, will attach to different factors, right? There's factor analysis and things like that, and you'll attach to these factors, whether it's like the work from home, and that is a factor in a sense, right? That can be created, but when they all trade the same, I think again you can pick from the rubble and try to find things. So thankfully, we've been legging into these things. So I'm talking about small positions to building bigger positions. We have a target position that we're trying to get to. And just knowing the nature of how volatile these things were and the future of the perception of these companies, we were thankful to leg in. And recently, obviously, adding a little bit more, and futuristically, if there's any more pressure, we would continue to add more. So that's honestly it. At some point, valuation for us is that support, and not technical support, but just we know or have a strong belief that we're at a point where that true margin of safety is there, where the downside is from a valuation perspective again is much less than it was before, and that upside is just totally asymmetric at some point. So that's how we've been looking at them, because again they're all trading together, and that's what ultimately creates the opportunities when a whole space is trading as one, as if they're actually related. But Zoom is communications, Fiverr is freelance marketplace, and Zillow is the housing market, and they're actually totally unrelated in that sense. And again, we think all three have structural tailwinds probably over the next decade. But if we bring that in, at least over the next 3 to 5 years.
Yeah, it's just two-part question here. First, I was going to ask you, about your time horizon on these, and then second, I know that you're trying to accumulate on weakness. Do you ever accumulate on strength on something, like, on these issues, like, a prove me point for, like, I'm looking at Zillow here. If in fact it ever gets over 65, tell us your time horizon, and buying on strength, but we also buying on weakness, but we also buy on strength.
Yeah. So time horizon is 3, 5, 7 years. Obviously, 7 years is a long time. But in general, like you're trying to anticipate that far out, right? You're trying to think of like what is the tailwind here for Zillow? Is housing moving more digital? Is Zoom? Is communications becoming more prolific in terms of how we organize and do this, right? Remote jobs, is that increasing the use of communication tools, but also freelance work? Is wage pressure is going to increase the demand for freelance work? Those are the type of factors we're trying to assess. So that's ultimately what like the time horizon as it relates to buying on strength and weakness. I mean, in theory, look, you want to buy on weakness, but at the same time, look, there could be that turning point where whether you start to get inflation plateau, and the fears around growth related investments are no longer as persistent. That may be that moment in time where you get a couple days of strength, and you know what, you're already at a valuation level that you're comfortable with. You already have a position that may be around or at the cost basis, and it's time to say, okay, well, most of those information or headline headwinds are somewhat out of the way. Again, that's a call you make at that point in time. So we will buy on strength, and as the business continues to execute, should they execute a quarter from now, a quarter after that, you can buy on strength as well, because valuation does change, right? If a business accelerates and more buyers and more sellers join these platforms, or they launch a new product, you may have considerable amount of strength over the last, let's say, year, as a hypothetical, and you buy that. I think that's key. We've done that in the past, and generally speaking, we look at 52-week low lists pretty aggressively, and that list is pretty long these days.
Yeah, I was going to say. I just want to note here, broader market is the trend has made itself clear at this point, right? Broader market is rallying. Crypto is rallying big this morning. Ethereum and Bitcoin blasted off on that
Just
CPI.
fascinating, which is
Yeah.
so bad. It's like I think crypto is an incredible, right? In general, like the fears around inflation, yet this thing gets smashed for the same time period, and then here, kind of you're getting that connection or correlation to stocks again in the near term, in terms of like risk on. It's more like a risk on, risk off. It feels like, as opposed to any sort of hedge versus anything, at least at this stage and day to day.
Yeah, go ahead, Joel.
It seems though is that with these three issues, you're looking at the landscape of the markets, from the last 2 years, and you're going, with I want to call these like stay at home stocks. I mean, I guess Zoom was. So from a fundamental point of view, you're looking at the changes that happened, in the workplace and also the marketplace with houses. You're kind of looking at it as like you're banking on these changes that happened are permanent. and that's why we are bullish these stocks.
Yeah, I think the housing situation is most people start their journey online, and 56% of all downloads last year were Zillow related assets in the real estate market. Um, and so that's a big stat. I mean, that's some serious dominance. They're about showing time, which is more of a CRM for agents. There's a million agents using that platform. Look, Zillow offers was really the dislocating like news that's really created some fear. In addition, like if you think inflation is going to run hot for however long you think, I mean, I don't know how you can think that without thinking housing is going to do fairly well in terms of pricing, as it's just a huge component of CPI. And what does that do for an asset that advertises against housing prices? And so that's one thing. Obviously, all the other home-related assets that as well should do well in that environment as well. So yeah, structural winners. I think that's the best way to characterize them. And again, you go back 2 years ago, March, April, May, June of 2020, and these stocks exploded higher. I mean, we were hesitant to touch those. I mean, it was kind of like a prove me that this is sustainable. We're 2 years in. Zoom had 350 million downloads last year. Teams had 175 million downloads last year. It's still it's the number one business app in the world. Look, demand, we shouldn't expect the same type of usage or growth that it had in the past, but they do have a big audience and new products to attach to this huge audience. So that's kind of how we're thinking about it. Valuation wise, you're paying 30, 35 times this business today with heavy margins, nice cash position, and a huge audience to sell new products into, whether it's contact center, phones, and the like. So I think, yeah, when you step back, that's it.
I think the wild card for Zoom would just be as if they can come out, and obviously they have a huge user base. They come out with like another product, like something else. Like what's on the horizon? Are they cooking anything up there, Sean? Do you know if they're like got some other ideas? Because if they could monetize their user base in a different way, I think they'd be all of a sudden not a one-trick pony anymore.
Yeah, so Zoom Phone, that's number one. They have 2.5 million seats using Zoom Phone. 4% of their user base is using it today, so they're very low penetrated. They have 30 plus customers that have 10,000 seats, right? So they have reference customers that they can go and sell into. And this is cloud-based kind of communication like phone systems, right? And that hasn't even evolved really at all. So we're really in the early stages of that. We think they can sell that. They also spoke about ads, right? And yesterday they were at a conference, and I think that's actually some of the stableness and maybe some of these tech-related companies is there were tech conferences all yesterday that everyone's getting to like ask questions and hey, is demand slowing? Is it speeding up? Is anything happening? But ads, I talked about ads. So some of the free users, specifically internationally, using ads as a way to no longer do you have to have the 40-minute limit and you can watch an ad or things like that. So creating an ad network around it. You also have contact center. They tried to buy Five9. Obviously that got shut down, but they're going to launch Five9 a contact center this year. We think contact center in general is a big space. Twilio went into that and some others. And then chat and messaging. So they're trying to obviously create the Slackish like tool. I think again, I agree with what you said, and that's always been our thesis: is you got to get past just a meeting and move into something where you open it daily as your email, as something else. I've been advocating buy an email service that's out there, one of the second, third tier ones, and or messaging platforms. There's plenty of good ones out there. It's just valuations. It's as they've come down, I think potentially they'll be more aggressive. They hinted towards that yesterday in the call, the CFO. That they possibly will be more aggressive here. And they also have a venture fund, just to throw that out there, is a $100 million fund, and they have 20 investments in that today. So they're definitely circling the wagons against things that use their service.
Hey, it takes some guts to come out, and say, yes, we are nibbling and clawing at Zoom and Zillow and Fiverr. But hey, credit to you, Sean. I hope it works out. And we'll have to keep tabs and see how it goes for you. But Sean Emory is the founder.
One more out of me here. Why do you prefer Zillow over Open Door or Redfin, or do you like those stocks too, or is there something about Zillow that makes it more attractive to you? Open, OPEN, and then Redfin, RDFN.
Yeah, so Open Door is obviously more of an iBuyer, or is an iBuyer. I think that interesting space, and I think they could attach into a Zillow platform at some point. They're frenemies right now, or they're more enemies now, and then hopefully in the future they're frenemies. And you have the marketplace where people come to a Zillow platform. I think it's just scale. I think that's the way we look at it, is the sheer dominance in terms of the stats I gave earlier. 56% of all real estate downloads last year were Zillow related apps, whether it's truly Street Easy, Zillow Rentals. I think that sheer scale is what we're looking for. The price you're paying for their core business is 16 times kind of the EBITDA of that core business today. Zillow offers will get off the books hopefully over the next 2 quarters, and you'll start to see that. And I think that's really where the turning point from a perception standpoint. Redfin, good company. I wouldn't say necessarily great company, just given their scale. I think it's a scale game, right? In this business, Redfin's a good company, so there's nothing wrong with Redfin. I just prefer the best in class leader there.
Sean Emory, CIO of Avory and Company. Check him out. Also on Twitter at _Sean David. Sean, always a pleasure, man. Have a good one.
Thanks, Sean.
Guys.
Alrighty. Hey, the market has stopped going up for the moment here. But
we hit 30.50. Like I said, I can't give you a resistance. If there is any. So as the market matures here, going into the open, we are now 150 points off that low from Monday. Just got to get through the pre-market high. That's what I'll do. If we can, hold up here, get through the pre-market high, keep on going, sustain above 47.30. I have nothing. Dennis, what are you seeing out there?
We're starting to see some separation between value and growth. So they kind of bought everything off the hop. They chopped it around. But then when they started buying about 15 minutes ago, 10 minutes ago, they started just buying all stocks. But now they're separating them. Some of the banks have actually ticked lower here as TLT has creeped higher. So we know there's an inverse correlation between the TLT and the banks. As TLT has creeped higher and now gone into the green, it was red a little while ago. Bank of America has now turned red. We've got Citigroup has given back all of its gains. It was up earlier, and now it is actually almost red. Goldman Sachs has turned red. JP Morgan has turned red. So you are seeing some profit taking in some of the value names. Burke is still up, but it's starting to get offered. So you're seeing a little separation. It's definitely more tech driven here this morning. Some of your big mega caps are trading higher here. A lot of smaller ones are building on those big gains that they saw yesterday. I'd imagine I brought up ARK, but yes, ARK is up 1%, having an okay morning here. A little bit of a continuation from what we saw the last couple of days, where value has lagged a little bit and they've been coming back into the growth names because they were simply oversold. So is this the start of a new growth rally? I don't think so. I think, I think eventually they'll pull the rug out from underneath these names again here. I think if ARKK gets up to 90 on a technical basis, that was the support where we broke down from on the triple bottom. You can see back in December, first low, middle of December, next low, January, no such thing as a triple bottom, took it out. Now you come back up to that point to retest. Does the 90 hold? I think it does. So I think you're selling growth names into the rally as ARKK approaches 90.
And maybe they were just looking for a little bit of hotter number, for the banks.
I think so. I think we look at it and we're like, okay, well, what do we do with this number? It's kind of in line. So what does that mean? In the market, that's why I was kind of, didn't know what to do off the hop, because if it's hot, we know where we're going. If it's, obviously a not so hot number, we know where we're going. But when it just comes on and it's like basically in line, which for the most part, Spencer, you've probably had time to dive into it a little bit deeper. It still looks like it was pretty much in line with expectations, correct?
Well, in line, but also in line with the estimate, but also in line with prior months, right? And so, and to Sean's point, what this number shows is that December was just it was a slight but acceleration, but it was an acceleration, right? Inflation did increase. So even though it was we called it type of thing, the trend is still pretty obvious, and inflation is still going up, right? That's the takeaway. It went up a little bit, but it went up nonetheless.
Yeah, inflation's still creeping up. We haven't got a handle on it. They haven't done anything to get a handle on it yet, though. I mean, they haven't even started tapering, for crying out loud. So eventually they're going to have to do something to get a handle on this. We know this is why the market's been spooked on a lot of the growthy names and some of the other stuff, and why they've been buying the banks, because eventually they do have to tackle this problem. It's not going to go away on its own. I mean, the consumer mindset, it's going to be a hard thing to get in check because the consumer mindset has changed. It has changed from being, stingy to like, I don't really need to buy that, to be like, well, we just went through a pandemic. We were locked in our homes there, a year ago, a year and a half ago. I'm not going on as vacations maybe as much as I'm going to do, but I'm going to buy stuff because you know what? It makes me happy. And that's YOLO, this thing, because we don't know like when the next, like the mindset's changed even on myself. Like I've always been like, I go in the grocery store and I buy what's on sale because I'm kind of cheap. I'm like, you know what? You only live once here. The money, you can't take it with you. We kind of realize that. So the consumer mindset has changed to be a spender, which probably continues to drive the economy overall. But that does not keep inflation in check. People are paying up and they're actually not minding. They're still buying the products despite paying up. So you get price gouging from companies. We're seeing this in a number of industries here now. Like I said, in the building industry, it's everywhere. Like there's just price escalation on everything because they're like, why not? Everything else is going up. We're going up too, even though they don't have to. So, and then you've got the wage inflation pressures behind that. That lags because people are making as much money. So they got to, make more money to pay for the escalated prices. So that's going to push up prices too. It's going to be a really hard thing to get in check.
There are so many competing weights and balances to factor into the equation here in terms of like, how to think and how to feel about it, because Dennis talked about us being in a spending and people willing to spend money. That's what you want. That's a good thing. You want people spending money. You obviously don't want the value of that money going down on a relative basis, but spending a strong a consumer that's spending is better than a consumer that's not spending. So I don't know. There's just a lot to think about here, but
lots to digest. And I just think overall, it's a really tough market to call. And anybody who says they've got to figure it out for 2022 is lying, or they're fooling themselves, because we can say, okay, it's likelihood that inflation is going to stick around. It's likelihood that banks, but again, when you're seeing a CPI at 7%, is it going to keep running at that, or is it going to go down to 6? And everybody's like, oh, we're fixed the problem because it came in a little bit. I mean, Joel, that's what we're going to do is we've raised the expectations of inflation. We're not going back to 2%. Just like it looks like housing, the market or interest rates aren't going back, up to 4, 5, 6, 7%. They're going to go up and creep up, but they can't go up that high. The same thing with inflation. If we come down and we're only running at 5.5 or 5 or 4, it's going to be declared a victory, even though the long term. If we go back to 6 months ago, the Fed's long-term goal of inflation was 2. Well, that's long gone. I don't think they're going to see 2 for a very long time. Their goal is just to get it to stop going up. Like stop, we don't want to start seeing 7, 8, 9%, which I don't think you're going to. I think the Fed will keep that in check, but I think you're going to run at 6, 7% for a while.
Well, also with the with the market holding up, and you also talked about it being market dependent and instead of data dependent. If the market keeps acting like this, then maybe 4 hikes are not out of the question.
If the market stays up, you're right. If the market can still be at all-time highs and take it in stride, they will keep raising rates. As long as they feel like that the market is taking it in stride.
I'm gonna start calling Joel Mr. Diamond after that one. All right, it's 8:58. I know we didn't really do any ticker time here. Let's see if we can do one ticker here. Let's at least do one from the chat. I know we there
was a lot of macro stuff.
Okay, here thoughts on GLD. Let's just do that. That's relevant to this conversation. So.
Inflation is supposed to be good for gold. We've been in the most inflationary environment we've seen in 30 years, and gold's gone nowhere. I mean, it can't go up in this environment. When's it going to go up? I think that the new younger generation doesn't even care about gold. And really, what is it then? If it's not a store of value, or if it's not, like it used to be flashy jewelry, I don't think you even see that much anymore. It's all NFTs and digital gold. I think just gold. I don't see it going to 5, 6, 7,000 even in an inflationary environment. So I own 0 gold. I will continue to own 0 gold.
Just from a technical standpoint, just looking back on since it had the big tank in the third week of November, this 1820, 1830 area, just recently we poked our head above that and then just gave it all back in 3, 4 sessions. So technically, if this thing can get bid at 1820 and make at least 2, 3 lows in that area, establish it, then you got another leg higher and you can work into this bar. But this area, at least on the last 3 occasions, it's been resistance. So not worry so much about the 3 highs. Where's that 1833 area? Is can they get a bid at 1820, build a new base, get out of this trading range. So that's what I'm looking at in the gold market.
All right, this has been a busy hour. We've got to wrap it up, though. It is 8:59. So, Joel, I will see you later at 3:30, as always, for the
Okay.
After Close show. Dennis, I anxiously await an update from you tomorrow on what you did with your JD and your Baidu.
I never even thought about those again. I'm to trade now. If I think about it today, maybe I lighten up the JD. Maybe I just get out of the JD. It's such a big move so fast. And I think I'm just going to get it back. I think honestly, if I'm going to sell it at like 79, I think I'm going to get it back at 70 here.
You probably will.
That's what the odds say. So I mean, sell the rips, buy the dips, right? So I like JD at this valuation now. It's not as attractive as it was a week ago. So I think you take the money and run.
All right. Hey, if you have any feedback for this show, for any show on Benzinga, shoot us an email. Let us know. Email us at shows@benzinga.com. You want to come on the show? Email us. Seriously, if you have feedback, you like something, you hate something, we want to know all of it. Good, bad, or otherwise. Shows@benzinga.com. We read all of our emails. Thanks to our guest today, Sean Emory. Thanks for all of you for hanging out in the chat. Slow Black, The Thinker, PJ, Born to Be Free, Miss Whitehorse, just Thad, JC, just to name a few. Donkey Limits, Adot, Ray, Pete. Thank you all for hanging out with us. I'm going to hop off here. I'm going to end this stream. It'll redirect to our next show, which is Live Trading with Benzinga. Mitch will be there. Ryan will be there. Junaid will be there. I, unfortunately, will not be there today. At least I don't think. I've got some meetings and phone calls to attend to. But they got a lot to discuss. They're going to digest this number as well and take some trades and maybe YOLO some options if we're lucky, if it's one of those days. So, hey, I don't know how we're doing on the like front. Not great is the answer. 303 likes. If we can get to 500 likes in the next 30 seconds, that would make me a little bit happier here. Hey, as always, everyone, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading or really any life advice at all for that matter. Just general rule of thumb across the board there. We are not advisors. All investing and trading involves risks. Obviously, that goes without saying. All right, I'm going to end the stream now. It'll redirect over to Live Trading with Benzinga. We are not quite at the 400 like. No, oh, yes, now we got there. Let's see if we can get to 450 in the time I'm done talking. What else was I going to say? Hey, the show's available as a podcast. If you missed us live, you want to listen to us in the car or whatever, we're on every major podcast platform, Spotify, iTunes, Stitcher, all of them, right? Apple, Google Play, whatever. We're on every major podcast platform. So check us out there as well. That'll be a wrap for me here. And let's go make some money and stay green. And everyone have a great rest of your day. I'll catch you later.